Welcome to the Phoenix Prosperity Podcast, where wealth meets legacy. Join your host, Tim Fergestad, as we explore the journeys of Phoenix's finest to success and beyond.
All right, hello, this is Tim Fergestad. Thank you for joining us. Joining us today is Kaaren Hall, founder and CEO of UDirect IRA Services and author of Self-Directed IRA Investing, a Bigger Pockets Guide. Yeah, Kaaren is a leading voice in alternative retirement investing, helping people use their retirement funds to build wealth through real assets like real estate and private lending. Yay! Welcome to the show, Kaaren.
Oh my gosh, Tim, thanks so much.
Okay, so obviously I'm a big fan of real estate. How did you get into running a IRA services company? And I am assuming it was because you were a big fan of real estate first.
Yeah, you're right. You're right. Because I like to joke that when I was a little girl, I dreamed of self-directing IRAs, but yeah, that wasn't it. Actually, I was a radio announcer first. And I did that for 17 years, long story short, and then made the logical transition into real estate, like you mentioned. So I had a real estate license and was like a realtor for a year, and did other things like property management, and later on got into mortgage loan servicing. We called it cleaning up after the elephant. The loan officers would sell them this and like, what do I have? And then I got into loan origination, and that was when we had, of course, the big mortgage meltdown in the early 2000s, right?
Okay.
And so I'm like, what am I going to do? I'm not going to sell real estate. I'm not going to be in mortgage. What am I going to do for a living? And I just happened to run into, and I was introduced to some people who were opening a self-directed IRA company or an office, like a branch office in Orange County. Okay. So I worked for them for a couple of years and then joined, or actually, went off on my own. And in 2009, formed UDirect IRA Services. And so we've been helping thousands of people self-direct. We have $1.2 billion under management.
Wow,
and
nice.
We help people do all different kinds of assets. Like you mentioned, real estate is normally the foundation of the assets that our account holders invest in. In some way, real estate's there, unless it's crypto, unless it's precious metals. But real estate is like, it's underlying for notes. It's under the underlying asset for so many things, if it isn't directly the asset.
Okay. Real estate's big, but with retirement funds, the sky's pretty much the limit, except for what, collectibles and what?
Insurance, life insurance.
Life insurance.
Mm-hmm.
Okay. And there's rules about real estate, like you can't buy a house and rent it to yourself or your friends, or there's a few things like that otherwise it's pretty you can invest in a lot of stuff with your retirement funds.
We call it prohibited transactions. It's like a game of keep away, for prohibited transactions. So we do that. We talk to people all day long about they'll tell us their plan. Like, hey, I want to do this. Mm-hmm. And if we hear a prohibited transaction, we're going to call it out and say, hey, maybe if you did it like this, it would work, but it's not going to work like that.
Okay.
Yeah.
But I guess to my point is, there's a lot more you can do than you can't do.
So much more, truly. Just a few rules to steer clear of, true. And it doesn't, it's always interesting when somebody really commits a prohibited transaction. We love to talk about it,
Oh, right. They get a lot more attention. You think it's a big problem,
but like 20 years in the business practically, and I've only seen like a handful of bona fide prohibited transactions. Because we're looking at every deal that goes through, and if we see something, we'll say something, and say, hey, maybe you want to restructure this because it's prohibited, and actually not fund a deal if we see a prohibited transaction.
Sure, which is great, and that's kind of the nature of having a custodian, right? Is to make sure you don't blow up your IRA. Can you explain to people why doing something prohibited is bad and the repercussions of it?
Like what happens? It's just prohibited. It doesn't sound that bad.
They give you a slap on the wrist and you got to sell it. And
I know. Like what? It's prohibited. But what happens is your IRA, it's kind of it's a tax protected kind of bubble of money, if you want to think of it like that. So if you commit a prohibited transaction, that bubble bursts, not just the asset that was in the bubble, but the entire bubble all those dollars become taxable to you, taxable back to the date of the infraction. And there will be excise taxes, penalties on top of that. So it's very, very bad, expensive thing to do. Now, there are ways to basically, I don't know, just say, hey, to argue that, hey, that wasn't a prohibited transaction with the IRS, and you need probably a specialist.
Negotiate some compromise, maybe. But
maybe so. We're just, you file there's a certain filing that you make with an attorney, and then you just make your case why it wasn't prohibited. So it's even just filing that, I think, is like 20 grand or something, just for the filing. So you have to make pretty darn sure that it's not. But again, this is like the 0.1% of all of our account holders that ever run into this. So it's fun to talk about the exciting stuff, but it almost never happens.
Don't let it scare you away from it. This stuff is awesome. And that's why we're here today.
Yeah. Yeah.
All right. So why don't you go ahead and explain what are some of the major perks of why it's so awesome?
I think it's awesome because it gives you choices. I think the stock market is also great. In my life, in our lives, we've seen the stock market just hockey stick, right? And it has its bounces, no doubt about that. It definitely bounces, but it's grown a lot, since I started investing. So
yeah, I think it might be a little overvalued right now.
Maybe I hear that, but what's great about self-directed IRAs is you can invest outside the stock market.
Right.
And where you may not be able to calculate a PE ratio on the stocks you just bought, you probably understand collecting rent on a rental property that your IRA may own. You probably understand making a note to someone, and then they would pay your IRA those payments, those note payments. We get that. So you can invest in assets with people assets you understand. And so it just opens the doors to so many different kinds of asset classes. And that's what's great about it. It's the variety. It's adding choice to your entire retirement portfolio, which has to be diversified. Don't you agree?
Yes, for sure. It's not just stocks and some bonds. And I think they've shown pretty thoroughly that they're not really reverse affiliated anymore, right? Bonds used to be the safe addition to a stock portfolio, and now they're overcorrelated, the whole thing, so it's all messed up. And so just getting into what they call alternative assets is a really smart play. If you look at all the big savvy funds, that they have most of their money in alternative assets, which is kind of funny because it should be the majority now, not alternative. But anyway.
Well, I have something to say about that, if you want to hear more. When you talk about that, it brings to mind that with the Big Beautiful Bill that passed recently, they're going to allow alternatives in 401ks, 403bs, 457s, employer plans. But it's not going to be the same as a self-directed IRA. So it's just like there's a mutual fund full of stocks. There will be they're calling it a sleeve of assets, assets that are alternatives.
So they're compromising accessibility and control still.
Well, compromising, I kind of threw me off there. Well, I'll explain how it works. So say you work at Home Depot and you're not an accredited investor, but you have a 401k and you want to invest in alternatives. Well,
and just to reframe this too for everybody, the old situation or still the current situation is you can only invest your 401k in whatever the provider allows you to, which is usually their menu of stocks and bonds, and you get to choose a ratio of how aggressive you want to be with it.
100%. And that doesn't change. But what they add to the list of choices would be one of these, sleeves of assets, or basically a fund of alternatives. And so then that custodian acts as the accredited investor for that deal. So even if you work over here and you're not accredited, you want to invest in an alternative asset, like we were talking about private equity, private placements, where you have to be accredited to invest with a self-directed IRA, you'll be able to invest in alternatives without even being accredited. And so that has to go through a process. It's still going through the process of being reviewed by the Department of Labor to make sure here's all the little fine points. They have so many fine little rules. But anyway, that's coming up, to be able to invest in a sleeve of assets, alternative assets with your 401k. So that's on the forefront.
Right. And so what I mean by my comment earlier is that sleeve is opportunities they've already selected and have middlemen fees associated and affiliated with, and they're not going to run all that for free, right? And so there's different layers of control or lack of control still in some of that, and if they're restricted options for you. But
the government's taking a full 360 on it before it's released, before they release the hounds there.
Right. But when you
Oh,
have your own, right? And so generally speaking,
yeah,
some you can do that with your 401k. In some businesses, you can do that. It's just usually the majority of the big guys, Fidelity, Schwab, or whoever, is it Vanguard and stuff. They do not let you invest outside of their menu of options
right.
for 401ks. Although you technically legally could invest in real estate, they usually don't allow it. Some smaller businesses have plans that do let you, but for the most part, if you leave a job, you can roll that 401k into a
Mhm.
self-directed IRA, and then you can do
Mhm.
whatever you want with it, which is the super powerful reason why Kaaren
Yeah.
started UDirect.
Well, and if you have a small business and you want to self-direct, you can have a SEP IRA, a simplified employee pension, and then you'd be making contributions for yourself and also for your employees, and they could self-direct those,
Okay.
that retirement account, the self-directed account for your employees. You can do that.
Okay. Okay. Most people have a 401k with their job, but they're restricted in what they can put that 401k to
Right.
work in.
True.
Um, but when they leave that job, they have this 401k that they can roll it over in something else, and now they have control.
Yeah.
Okay. And can people just set up small businesses can set up their retirement accounts with you directly, right?
Yes, yes. People who are solopreneurs can have a solo 401k. It's a 401k, but it's for the individual business owner. And so you can't have any full-time employees in any of the businesses you own. So that's a 401k for the individual business owner, but a SEP could be for a whole company.
Right. Okay. I've used self-directed IRAs to invest in real estate, owned
Hmm.
rental
Yeah.
homes, invest in syndications. I have a solo 401k that I also
Mhm.
do that. You have a lot more control over that, which is a lot easier in
Yeah.
some ways. Depends on your goals and what you're doing. Um, it is nice to have a custodian double checking you though.
Yeah, you want a different set of eyes to look at to look at your deal. And for example, if we were talking off camera about note investing a little bit, and when you're investing in notes in the olden days, like I'm in California, Southern California, there's the older guys here, and they like to do the napkin note, like my word is as good as gold. They just want to write it on a napkin. No, no napkin notes. It has to have a principal amount, it has to have an interest rate, it has to have a maturity date, the whole nine. It has to have all the elements of a real note done up like a note, not just on a napkin. So just saying, it has to be a real note. But we see all kinds of things. We see all sorts of things that people want to
Yeah.
invest in.
Okay. And you help them do it, but also make sure they do it correctly and don't shoot themselves in the foot.
Yeah, we get to say what we will and won't custody, what is and what is not administratively feasible is what we call it. And so
Okay.
we're looking at the asset for that with that kind of filter. Is it administratively feasible?
Okay. Okay. Um, just to sort of finish up with the real estate stuff,
Yeah.
because otherwise I'll keep talking about it.
Oh,
Is
yeah.
so you started like the Orange County RIA, or you help run it? Is how does that work?
Yeah, in 2012, I started Orange County Real Estate Investors Association. So I founded it, and we are in Orange County, California. So the second Thursday of every month, even through COVID, we went on Zoom, and we're slowly getting back out to doing live events. We did one in January, February, and March actually. So we'll
Okay.
be maybe going live again. It's so nice, and when I have these events live, when people come up to me and say, "Wow, I just love that you're doing these live events again. Please keep doing them." We love because people like investors like to talk about their deals, come and talk to each other.
Sure.
And so we have these events locally in Orange County. Mhm.
Excellent. Excellent. And you have these are coordinated with the company too a little bit, so you can give information on local real estate deals, but also retirement investing.
Right. And so we have speakers who will talk about different aspects of real estate investing, like maybe a 1031 exchange expert or a CPA or somebody in multifamily, so someone who's got a specialty, have them come in
Sure.
and talk about their niche and teach people about that. And maybe it could be real estate marketing. There's it's like this big elephant real estate. And there's so many parts
Sure.
to it,
So many options, so many different ways
yes.
you can customize it and
Yeah.
combine things.
Mhm.
You can house hack a fourplex while subletting and something else, and have what's pad split the individuals in between that you could all in one, right? And anyway.
Yeah. It sounds like brain damage to me, but you could do it. You could do it. You sure
Yep.
could.
Yep.
Mr. Money Mustache, right? I mean,
Yep. So okay, branching away from real estate, then what's sort of one of the more interesting or weirder investments you've seen people do with their retirement funds?
So I said this on a podcast last year, and I'm not kidding. I got 9 million views on that reel. Okay. So here it is. Now this was 2007. So I just told the story. I didn't preface it at all at that time. And I have an article on UDirectIRA.com. There's a blog article about this. If you want to go, oh, you can't do that. So you could read the blog article. But what this young person did, this young man, is he took his Roth IRA, used it to buy tickets to the Super Bowl. Okay. Mm-hmm. And then he sold those Super Bowl tickets at a profit. That profit went back into his Roth IRA. And tax-free, because a Roth IRA is tax-free. So the pushback on that is, well, you can't invest in collectibles, but they weren't special tickets, they were just tickets.
Right.
And so it's not a disallowed asset. The IRS says you can invest in anything except life insurance contracts and collectibles. So a ticket has value. So it wasn't a collectible because it wasn't like an anniversary ticket.
Right.
Yeah. It was there you go. And so there was that. And also this young man who did this, it wasn't his business. It wasn't like he wasn't like in a trade it was just a one-off thing that he did.
A professional scalper. Correct.
He was not a professional scalper. He just found this opportunity. So that is the most unique thing I've seen. Now, of course, today, since 2007, where we're not heavily regulated as an industry because we are not advising people what to invest in, the rules have changed and we are held to a higher degree of accountability. So there are a lot of assets, again, not administratively feasible. So first you'd have to now find the custodian who would say, sure, Super Bowl tickets are great. Maybe you'll find one.
Okay. Mm-hmm. I've seen movies. How often do you see people backing films with their retirement accounts?
Yeah, I belong to a group called GoBundance for Women.
Oh, nice.
And so
GoBundance. Okay.
So and so one of the women in there, Marissa, she is a producer. She's she's so fabulously talented as an actress and singer, and she's a movie producer. So she produced a movie, and several of the GoBundance, the Go Girls, they invested using their self-directed IRAs into her movie. And we do see people invest. I mean, especially here in Southern California, right? Invest in movies.
Okay. Yeah. And I imagine that can be incredibly lucrative. I mean, some people have incredibly large ones. I don't remember who's the Mitt Romney, right? Didn't he have?
Yes. His multi-million-dollar Roth IRA. Yeah. Yes, he did.
It was like
PayPal.
100 million or something.
That was Peter Thiel. It was PayPal. Yeah.
Okay. Yeah. But there's a few of them that when they did it legitimately, but it's just when people see, oh, that's not fair.
No, it's totally fair. I mean, the tax code is basically there to tell you how you could avoid tax. Right. Most of it is. So given that, but yes, they use the tax code. And what happened as a result of that, these big Roth IRAs that were, billions or millions of dollars, they did an investigation, which probably cost more than all the money in those IRAs, to see if they could find any, like, were they cheating or
was how do we get some tax money out of this?
Right, 100%. And they found nothing. Basically nothing. Everyone was doing it right. There were maybe 400 people with these multi-million-dollar IRAs. Not many, and it certainly wasn't worth the effort and the expense and effort to try to go after them, but they did. So that happened.
Right. But I mean, you can back a business and private equity. You can do it and make all sorts of crazy big gains, right? Yeah. Venture capital, you can get some really big returns, and it seems like a great place to put, particularly things that you don't need that money. It's in a retirement account. You don't want to take it out early and you can be penalized. You can do all sorts of stuff with it. That'll take a while or. Mm-hmm. Yeah. Anyway, money you don't need right now is.
Well, and to your point, what I love about IRAs is we've seen a couple of downturns. We saw, like I was mentioning, the Great Recession. We had COVID, some black swans where the economy was tough on people. So a self-directed IRA could go in, and like near me, there's a strip mall, there's a gas station, there's like a nail salon, and a couple little restaurants, that sort of thing, and it's just the neighborhood. And so some of those people went out of business, but a self-directed IRA could come in and be a debt or equity partner in helping those entrepreneurs get back into business after a downfall. So it's really a grassroots level of building the foundation of our economy, really, because when you can invest in other people's businesses or do what you do, like, build apartment buildings or something like this and invest in the house, the housing that people actually have. So these IRAs are put to work. This retirement money is put to work in just the infrastructure of our country. So it's
Right.
pretty great.
Yes, for sure, for sure. That's again the control, right? Of being able to invest in what you want.
Yeah, do something good. You feel good about it.
Yeah. Impact investing. So, what's kind of been one of the bigger challenges running UDirect?
Yeah, I think early days, there was a big learning curve. I'll say there was a big learning curve in just in what I want to say in so many different things in run. I'd never run a business before, but now I've run UDirect for 17 years or so. We've always been in the black. But so you learn how to do that, and you learn so many different things. I'll just leave it at that. Or just like I can think of stories. We'll just keep it short.
Being an entrepreneur is not for the faint of heart.
But then it gives you things you can teach others, so you can teach the next generation.
It's a path of growth for sure.
So I've taught my kids. We were talking earlier offline about our kids. And so, my kids saw what it took for me to start this business. And now they're just doing so well. They're so good with money. They really understand how money works and how it can work for them. They both own real estate. And my son has a rental. My daughter just bought her first, primary house. And I'm just so happy that as young people that they just understand that path already. And that's very gratifying that's because of this business and what they learned from it. Because they would always do the check-in table at OC RIA, or go to an event with me if it was local and run the UDirect table for me. So, yeah.
Okay, nice. Okay, yeah, that's awesome. That's awesome. You have any? I mean, you've been crushing it. You have over $1 billion in AUM, I guess you'd call it,
or AUC, assets under custody,
instead of management.
Yeah.
Okay, so do you have any big goals coming for the company, or maybe just for 2026?
Well, I think it's important to always be growing, grow or die. And so we're taking steps in that way and working with a team. With our team is working with another team on, management training and sure, we're always looking to do better. In fact, we've been having record month after record month lately. And so we're just looking at serving more people, because the more people we serve, we're going to solve this problem. And here's the problem. It's retirement itself. So one day I'm going to retire, we all are. So I'm thinking, well, how am I going to do that? Like, I have this many dollars. How are they going to last until whatever age? And so what I realized is that retirement's kind of a layer cake. And so I think that like the base layer is Social Security. Either you get it or you don't, but there you go. And after that would come things like your personal savings, your 401k, your self-directed IRA, any assets you personally invested in, maybe even the equity in your primary house. So it's all these different investments that you've made over your life, including whole life insurance, annuities, so many different kinds of products that and investment strategies that can get you there. So I don't think that it's wise to just rely on one strategy. That's why your investment advisor is always telling you to diversify. And there are a lot of things to diversify in. And I think that's a brilliant idea. So self-directed IRAs help you diversify so that all your eggs aren't in one basket. If the stock market tanks, you still have this asset over here,
Right. Yep, for sure. I want to talk a little bit about why UDirect is awesome. There's a few different custodians out there, but UDirect has some distinct advantages. Can you sell us a little bit?
Yeah, I'd have to say it's our crew, it's our team here, because what we answer the phone, we talk to people, the way we've got it arranged, you always work with the same, for example, transaction coordinator when you're investing. And then as you become a regular investor with your IRA, you'll get used to talking to that same person, unless they're on jury duty or on vacation or something like that.
Boy.
And it's just the customer service is very high. And I think another thing that's great about us is that we're not feeing people to death. We have a flat fee. So that makes us really especially good for high dollar accounts, because it's not a percentage of the money that you have in the account. It's a flat fee, regardless of the number of assets and regardless of their value. It's not like a flat fee plus, fees for other assets. Okay. I mean, we do have like a wire fee. We do have if you want a special check or something like that, there could be a fee, but we don't fee you to death.
Okay. Before we wrap up, go ahead and explain real quick why there's some special sauce for UDirect and investing in like a syndication.
Right. So one of the things that we do when we work with our B2B clients, the syndicators, we'll get your docs, and we'll already have looked at them, and so we'll have them, ready for, and we can get them ready for the investor to just sign and move forward with on this side, and we can work very closely with the asset sponsors to make the whole thing seamless. So that's one of the things that's a huge advantage.
The way you hold title, right?
Yes. Yeah, so the traditional way to hold title in an IRA is FBO. So it's the custodian for the benefit of, the IRA.
So and so's IRA.
Correct. But it's also, we sometimes will hold title as the person's name and be a non-trust custodial IRA with the trust company. And we do that. The reason we've had that vesting since 2018 is because during the Great Recession, maybe you remember, you could buy properties on tape. Remember that? You could buy 50 houses at once, sight unseen. Now, that doesn't happen a lot of times. But what would happen is that IRA investors would get these houses and then forget about them. And then there would be these weed abatement notices, or, you didn't mow the lawn or something. And so the cities or municipalities are saying, well, who owns this property? Whose responsibility?
Well, even if I had one property, I've had that happen to me before.
Right? Yeah. And so then when they look at the title, it's the trust company that owns it. So then the trust company ends up getting sued because
they send a notice to the custodian or something. Yeah.
So with real estate, it's their name via non-trust custodial IRA with the trust company, like that. So that if somebody's looking, they're going to see who owns the asset. Because you have to be responsible for your IRA. That's what self-direction is about.
Yes, exactly. I love that. It's so important, and it makes the experience for the clients too much easier. And anyway, so kudos, well done. I love all that.
Thanks.
Okay. Okay. So you have events coming up. If people wanted to learn more about, let's say, the RIA and stuff, can you share the website for learning about the real estate investing in Orange County?
Well, sure. It's OCREIA, OCREIA, which is an acronym for Orange County Real Estate Investors Association. And it's ocreia.com. And so again, if you just go there, it's a simple site, and just click, look at this month's meeting, and it will tell you about the upcoming speaker for that month or for the next event. And then you can register there and show up. And sometimes we've been doing these on Zoom since COVID. So now it's kind of hybrid, moving back to being there in person. So that's where it stands today. But we do have a library. If you're interested, we could send you recordings from the past.
Nice. Okay. And Kaaren, if people would like to learn more about UDirect or reach out to connect with you, where can they go? What should they do?
The very best place is our website. It's the letter U, UDirect the best place, but we're all over social media. I mean, even TikTok and X, and we're on Facebook and LinkedIn, and we're on Instagram, all of those. So we're everywhere, and giving you little tidbits about self-directed IRAs, little factoids, just to store like, oh, I didn't know that, So there are a lot of little fine-tuning things about self-directed IRAs.
Excellent. All right. This has been gold. This is hopefully helps a lot of people. Kaaren, thank you. Thank you everybody for listening and watching. Again, thank you, Kaaren Hall, for joining me today and sharing your insights into the retirement investing industry.
Thank you, Tim.
Inspired by our guests? Visit PhoenixProsperityPodcast.com/guest and join us on the show and share your success story with Tim. The spotlight awaits.